Audit of cash and cash equivalents. Definition of cash. Cash includes money and other negotiable instrument that is payable in money and acceptable by the bank for deposit and immediate credit. It includes cash on hand, demand deposits and other items that are unrestricted for use in the current operations. A. Cash on hand. 1. Undeposited dated customers' checks or customers' checks awaiting for deposit. 2. Traveler's check. 3. Cashier's or treasurer's and manager's check. 4. Postal money orders, a demand credit instrument issued and payable by a post office. 5. Undeposited cash collections, currencies such as bills and coins. 6. Bank drafts, a written order addressed to the bank to pay an amount of money to the order of the maker. B. Cash in bank. 1. Demand deposit, commercial deposit, current account, checking account, generally non-interest bearing. Withdrawable by checks against bank. 2. Savings deposit, savings account. Generally non-interest bearing. Depositor issued an ATM card or passbook. Withdrawable in ATM station or within the bank. C. Cash fund, current operations. 1. Change fund. 2. Payroll fund. 3. Purchasing fund, for purchasing of inventories. 4. Revolving fund, fund that is used for limited or specific purpose set by management. 5. Interest fund. 6. Petty cash fund, for small and miscellaneous disbursements. 7. Dividend fund. 8. Travel fund. 9. Tax fund. Fund for non-current operations. 1. Pension fund. If related liability is current, then pension fund is current, thus part of cash, minimum of 10 years. 2. Preferred redemption fund. Non-current investment. Unless the preferred share capital has a mandatory redemption and the redemption is already within 1 year from the reporting period, in which case this fund is already part of cash equivalent. 3. Acquisition of property, plant and equipment, always non-current even if expected to be disbursed next year. 4. Contingent fund, non-current investment. 5. Insurance fund, non-current investment. 6. Sinking fund. If the related bonds payable is current, then sinking fund is current, thus part of cash. Classification of cash fund as current or non-current should parallel the classification applied to the related liability. Thus, an entity should classify such non-current asset if the related liability becomes current. Cash equivalents are short-term and highly liquid investments that are readily convertible into cash and so near their maturity that they present insignificant risk of changes in value because of changes in interest rates. Examples. 1. Time deposit, acquired within 3 months from maturity date. 2. Money market instrument and commercial paper. 3. Treasury bills. 4. Redeemable preference shares with mandatory redemption period and acquired 3 months before maturity. If an item cannot be included as cash equivalent because it did not qualify the cutoff time period, this is 3 months, it will always be classified as investments, short-term or long-term, depending on the period up to maturity. If the problem is silent with regard to 1. Treasury note, assumed investment. 2. Cash in money market account, cash and cash equivalent. 3. Time deposit, cash and cash equivalent. Measurement issues in cash and cash equivalents. 1. Cash. Measured at face value. 2. Cash in foreign currency. Translated to Philippine peso. 3. Deposit in foreign bank. Unrestricted, included as cash. Restricted, if material, classified separately among non-current assets as receivables. 4. Cash in closed bank, banks in bankruptcy. Non-current asset, estimated realizable value. 5. Bank overdraft. Different banks, current liabilities. Same bank, netted against the account with positive balance but cannot be offset against restricted account. 6. Compensating balance. Is the minimum checking or demand deposit account balance that must be maintained in connection with a borrowing agreement with a bank. A. Short term, presented as cash held as compensating balance, current receivable. B. Long-term, presented as cash held as compensating balance, non-current. Receivable. If the problem is silent with regards to compensating balance, it is assumed not legally. Restricted. 7. Undelivered, unreleased check. Reverted back to cash. 8. Stale checks, checks outstanding for more than 6 months from the date of check. Reverted back to cash. 9. Postdated checks. Checks dated after reporting period. Company's check. Reverted back to cash. Customer's check. Not yet cash, accounts receivable. 10. IOUs, IOU. Part of receivable. 11. Equity securities. Cannot be classified as cash equivalents because shares do not have maturity date, except redeemable preference shares. 12. Redeemable preference shares. Specified redemption date and acquired 3 months before maturity date are classified as cash equivalents. 13. Callable preference shares. Shareholders' equity. 14. NSF, DOD, DAIF. Reverted back as part of receivables. DOD. Drawn against uncleared deposits. DAIF. Drawn against insufficient funds. 15. Expenses, advances. Receivable or prepaid expenses. 16. Temporary investments in shares of stock. Either fair value through profit or loss or fair value through other comprehensive income. 17. Unused credit line. Disclosed in the notes. 18. Treasury warrants. A warrant for the payment of money into or from public treasury. Included as part of cash. 19. Escrow deposit. Restricted amount held in trust for another party, i.e. deposit required by court of law for a pending case. Other current or non-current. 20. Unrecorded cash disbursements. Increase recording of disbursements. 21. Unrecorded cash collections. Increase recording of receipts. 22. Certificate of deposits. Invested 3 months before maturity, cash equivalents. Invested for more than 3 months, investment, short or long term. 23. Postage stamps on hand. Office supplies.